Hello everyone, welcome to another video. And in this video, I want us to quickly talk about something that I don't think is always talked about. Often we hear the importance on buying, selling stock, or being invested in the market for the long haul. But what do we do when the market is turning against us? Okay, so in looking today, there's something happening with cryptocurrency. And I'm going to go ahead and click on here for Bitcoin. And Bitcoin obviously trades even when the stock market is closed. And it's currently down 8% or $1,600. So it's currently trading at $18,782. All right. And this is from earlier in the week where it was hovering between, say, 20 and 21,000. So this is really, it's a lot of pain, to be honest with you, that's happening in cryptocurrency. Now, what does that have to do with buying and selling stock? And really, I guess the connection I would make is that when you are invested in something, it's important that you keep your investment thesis at the very front of your mind. So if you're invested in cryptocurrency and you see this market, what's happening, if you're a long-term investor, then it would be important for you to just keep your cool about it if your thesis remains intact. In other words, the reason that you bought crypto, if that same reason is still in place right now, then you should go ahead and hold on to it, assuming that you are, directly in Bitcoin, or if you're in a, secondary company, then that company that you purchase, or if you're in an ETF, then you feel that that's a sound, investment vehicle. All right. So why do I say that? Why is this important? Because if we look at the headlines, should you buy the crypto or should you buy the Bitcoin crash? Even some crypto bulls are saying not yet. So here we have an article, this is from Yahoo Finance, and it's talking about how the crypto markets have gone down. There's somebody here who is a managing director at the strategic fund. He said he's been in 80% cash for a while because of the choppy crypto waters, right? So there's that one. Then you have another article, crypto bull Mike something warns the economy is going to collapse and the Fed is hiking rates as a bubble pops. Okay, so he's actually bullish on crypto, but he's just saying, bubble popping. So of course that's not too encouraging. Then another one, and this one came out today, we have Bitcoin sinks below 20,000 as crypto meltdown intensifies. All right, so again, if you are in cryptocurrency right now, your stomach will probably not be in the best shape, right? You're feeling probably sick right now to see this crash continue down. And we know that when things are heading down, especially like this, that they can continue. Further concerning for some is we have these companies that, hold on a second, we have these companies like, what's this, Celsius, and it halted withdrawals. And of course, so this is of course concerning to anybody depending where your cryptocurrency is. And then I know Terra, either this week or last week, it crashed. Something happened to it. It crashed or whatever. I don't know, but I just know that whenever you see these bearish, kind of the end of the world is coming, that's not a good feeling. But again, I go back to knowing your thesis. So I'm going to quickly, this whole period reminds me of something back in 2017, and that was the death of retail. And I'm going to just jump here for 2 minutes just to talk about this. So in 2017, and here's an article from that time, everybody was saying that Amazon is pretty much taking over the world and that online retail was going to overtake brick and mortar retail. And it got to a point where the valuations on retail stocks, that's your Target, your Macy's, your Simon Property Group, your Walmarts, the valuations were just, they contracted, they were compressed. So we had companies just pretty much bleeding out. And at the same time, right, it was founded in some truth because at the same time we had Sears going under, Circuit City, a lot of companies that were just going under in the retail space. All right, so this article, and I'm not going to read it, but just so you can see, there's things like this here. So we have this little chart. And if you were in retail stocks, it's not to say that what they were saying wasn't true. It was true that retail was growing and that brick and mortar was actually falling. And again, we were seeing stores just collapsing left and right in the long run. And here are some charts here, like Macy's, Sears had just gone under, JCPenney pretty much were on their way out. Their stocks collapsed. So again, a very similar time that was very bearish. Here's an article from Seeking Alpha. The retail death spiral continues. And this was from March 2020. March 2017, sorry. And here it says, never confuse going down a lot with cheap. It's looking like retail will be the oil industry of 2017. If you have any retailers left in your portfolio, get rid of them before they go to zero. All right. And that is pretty much, that was pretty much the death of retail. Now, some of these companies indeed did not do too well while others did. And I think that's important to talk about. So here we have Amazon. Victims, these stocks have lost 70 billion. This was same time frame. They talked about 54 stocks that were pretty much on their way out. And again, you see here we have Macy's, JCPenney that really were getting slammed at the time. Now, what I want to do though is I want to pull up a chart of Target during that same period. And this is important to me because this was something that I actually lived, having been in the market during this time. So here you can see from 2017, Target was trading right around, let's say, $70. And then at its low in June, it was down to, had a low of like 48. So that was a good, I don't know, maybe like 40% haircut that it took. And then you can see consolidation. And then you can see that it actually has done pretty well since then, right? Then we can move to Walmart. They're going to see a similar story. 2017, it wasn't really that impacted by the death of retail, just because Walmart, of course, is a giant with pricing power, and this was going to be a competitor with Amazon. But as you can see, it's done pretty well, even with this most recent decline, where stocks are falling off a cliff. Macy's, on the other hand, here we have Macy's, and you can see Macy's really is not done well at all. And when you think about it, though, that's because when you compare Macy's to some of these other companies, obviously there's a difference. I think most people would say like Macy's, JCPenney, Nordstrom, those are kind of legacy companies on their way out. And really, it's just to sum it all up, it's this. It's that news is going to come and go. There's going to be bearish sentiment in the market. There's going to be bullish sentiment in the market. There's going to be, oh, now is the time to buy. Now's the time to sell. Going to be bears getting slaughtered when the stock goes up, or bulls getting slaughtered when the stock goes down. And a lot of that, honestly, is just noise. I keep going back to the idea that you just have to remember, whenever you make an investment, have your thesis in mind and have your exit strategy in mind. If you were a buyer of Bitcoin and you had an exit plan that said, I'm going to sell when it's down 10% or 5%, kind of more of that active trader style, then you would have already been out and you wouldn't be experiencing this. However, if you said, I am bullish Bitcoin because I believe Bitcoin's going to go to XYZ number, then what you do is you will sit in, you will experience the pain, and you will likely, if it's in your plan, you will continue to add to your position, or maybe you'll stop and just say, I'm going to give it time. But again, you will have a clear plan in place and you would just ride this out. Now, it's important for you, or for me to say, I actually own, or I have exposure to Bitcoin. However, when I purchased it, it was with the idea that it's going to be going higher than these levels. So although it absolutely sucks to see this going down here, my portfolio is absolutely being slammed, because I'm a long-term investor looking, 5 years at a minimum before I start making any major moves. That's kind of my timeline. I plan on just sitting in and trying to enjoy the ride. That could mean Bitcoin 10,000, could be Bitcoin 5,000, but I'm in it, going to enjoy the ride. And then in time, we'll revisit this video, and one of two things are going to happen. Within the next couple years, one of two things. Either Bitcoin will be at significantly lower levels, and that's it, or Bitcoin will be at significantly higher levels than where it is now. So just wanted to make a quick video as the sky is falling. Remember why you got into your stock. Revisit your trading plan, and if you don't have one, stop right now and think about what your steps are going to be moving forward without making any rash decisions. And the weekend's the best time to do it, because a lot of times you can't, engage in trading. Give it some thought, and then approach Monday, or in this case Tuesday, because the market's closed. Approach it with a clear mind, ready to go. All right. So as always, I thank you for your time, and with that being said, please subscribe to the channel if you like the content. And this is Dr. Diffins signing off. Bye-bye.